The ERC is a fraud. There's only actually 2 ways that you can qualify for them. And if you don't qualify, you can actually end up in jail or get audited, or it can just be a big deflection for your business. And I don't want that for you. Okay, so a friend of mine the other day, we were walking and he was talking about this employer retention credit thing. And he's like, I don't know, I'm nervous to take it. I'm not sure if I qualify. And so like, I literally just pulled my CPA up because I'm like, hey man, we have a question. Why does this ERC thing, why is it everywhere? I'm getting calls, emails, and it's because if you can save, like get an employee retention credit, there are these third-party companies out there that are actually trying to get those credits for you, and they get paid 25% of whatever the credit is. And they don't care if you get it legally or you find out that you've taken it and it wasn't right. So they get paid regardless. That's the craziness. But the reason I'm doing this video is there's only 2 reasons you can actually get the ERC credit. I want to explain them very simply because there's a lot of hoopla out there. There's a lot of lies out there because these third-party companies, they get all this money and then they can go bankrupt and nobody really cares. Like it's bad for business. So number 1, you have to have 2 consecutive quarters of negative revenue growth, meaning your company was growing, COVID happened, and then your company stopped growing for 2 quarters. That's the number 1 use case. If you have that, then you should get an employee retention credit if you kept your employees, right? People don't understand that if you take the ERC credit, the employee retention credit, and you take it unjustifiably, meaning you shouldn't have actually taken it, it's a law. And so you're actually breaking an IRS tax code. And they passed this law because there were a lot of businesses that were really harmed during COVID. And then there are some businesses that were helped. And all the food delivery services that just kind of spiked in their revenue. Like if you were a home fitness equipment maker, you made a ton of money. If you were Zoom, you were like, woohoo! So if like Zoom went out and actually applied for this ERC, the government would be like, what the heck are you doing? This is tax fraud. So what is at stake? If you take the ERC credit and you actually shouldn't have taken it, the IRS will come back and they're saying we're gonna levy huge fines. Plus, they're gonna look at every single entity that you own and do an audit. And so audits are painful, they're difficult, they're hard, it's a lot of waste of time. They're gonna look at every receipt and scrutinize. So the other issue is if you had any kind of supply chain issues. So you couldn't get products, so it negatively affected your revenue. But literally, if you can't prove those 2 things, like on paper, in your results, to your CPA, you should not be trying to get an employee retention credit. And these companies are lying to you to get your money because they have to get paid up front, and they don't care if the IRS comes back and audits you and finds out that you shouldn't have taken that credit. So just be careful. Those are the 2 scenarios. That's it. Don't do it for any other reason. The best advice that I can have is if you have an ERC company coming to you, take the information that they give you, go to your CPA and talk to your CPA, because CPAs, their license is on the line. So if your CPA says, yes, take it, you actually qualify, you're likely gonna qualify. Like they're saying that we're not breaking any tax rules in order to do this employment retention credit or employee retention credit. But these third-party companies, they're risky, they don't care, they get paid up front even if you're getting a credit from your tax. So those people, you just gotta be worried and scared and nervous and know there's only 2 reasons, right? 2 quarters of consecutive revenue decline or supply chain issues with your inventory that affected negatively your revenue as a company. And you had to have kept your employees, right? You had to pay your employees during this time frame, this COVID craziness, even when times were tough. So you gotta have all 3 of those things exist in order for this to actually work out for you. And you have to be really careful of all third-party companies that take a percentage of a tax savings, because those companies, there's some legitimate ones, but there's some non-legitimate ones. And so I'm always getting advice from somebody and then looking to professionals, whether they're CPAs or tax attorneys, who can actually corroborate that information before I make a decision to take a credit or make a deduction. And that's an important skill set as a business owner, because if you go through an audit, it will be a time suck, a brain suck, and it will affect your revenue, and it'll be only your fault. It'll be you to blame that you made this mistake.